So stocks had another very strong year in 2024. In fact, 2024 marked the first time the S&P 500 has enjoyed a 20% plus gain in back-to-back years since 97-98. But last year didn't start out so optimistically, though. The list of worries among stock market bears included high valuations, narrow leadership by the largest technology stocks, rising long-term interest rates, election uncertainty, deficit spending, and more. But stocks rallied through all of that without so much as even 1/10% correction. So the stock market's surprising ascent in 2024 does offer some important lessons for investors, and we've outlined 5 of those here. Number 1, the herd is often wrong. So Wall Street underestimated the S&P 500's price at year end by about 15%. Remember, positive years for stocks are about 3 times more likely than declines. Number 2, the trend is your friend. Employing technical analysis can help investors avoid mistakes. In an upward trending market, don't take a detour just because of some bearish narrative the market may not actually care about. Number 3, bull markets typically run for a while. They last more than 5 years on average and rarely end when the U.S. economy is growing, especially when the Federal Reserve is cutting interest rates. The current bull market, about 27 months old. Number 4, earnings drive stock prices. The fundamental value of stocks comes from a company's earnings. S&P 500 companies will likely grow earnings about 10% in aggregate in 2024 and may do so again in 2025. Number 5, focus on the long term. Don't get scared out of the market by the headlines if you're a long-term investor. Time in the market beats timing the market, as they say. Waiting it out through down periods is the best approach for nearly all investors. Since 1980, after all, the annualized rate of return for the S&P 500 is 12.1%. So the U.S. economy also offered investors what we'll call a bonus lesson, that betting against the U.S. consumer is often a losing bet, especially unemployed U.S. consumer. Mortgage refinances during the pandemic and the wealth created by higher stock prices all added fuel for more spending, particularly from the upper income consumers. So these are all good lessons to tuck away for 2025 as we get underway. The coming year may not bring quite as much joy to our portfolio as 2024, given how much good news may already be priced into the stock market. Inflation pressures may reemerge, and geopolitical threats could upend rallies. But with steady economic growth, a healthy job market, growing corporate profits, and continued investment in artificial intelligence, the ingredients for another profitable year are in place. As always, please reach out to me with any questions. Thank you for your continued trust and confidence in what we do, and Happy New Year.